Welcome as we take a look ahead to the week starting Monday, March the 7th. Let's look at some of the economic data to watch out for. There really is only one event of the week, and that's on Thursday, but a quick snapshot of where we are on Monday. By the time the European markets get underway, we'll have the Japanese leading economic index to have in our back pocket, possibly to trade off. Then we've got the Eurozone finance ministers meeting lasting over a couple of days. The main issue there is going to be Greece. German factory orders, we've got a couple of US numbers to watch out for as well. On Tuesday, of GDP numbers, the last look at Japanese fourth quarter and also trade balance as well. And we'll also get the Eurozone fourth quarter as well, the last revision there for that. And the Australian NAB business conditions and Chinese trade balance. On Wednesday, there's the Reserve Bank of New Zealand interest rate decision. The first of 3 rate decisions next week. The second is the Bank of Canada rate decision. We get that later on in the day. Also get the NIESR GDP estimate for the UK. The National Institute of Economic and Social Research uses the Treasury model. That'll be the last reading of that before the budget on the 16th of March. On Thursday, as I said, the big one really is ECB interest rates, although by the time that happens, we'll already have seen as well Chinese inflation, which could make for interesting reading. And on Friday, snapshot of some of the points to watch out for, starting off with German inflation and ending with consumer sentiment from the University of Michigan. Chris Beauchamp is with us, looking at some of the tradable data points. Let's go just for the main event of the week, the ECB.
It is very much a case of hurry up and wait for the first 3 days of the week. I think really we'll find out what Mario Draghi thinks about the Eurozone economy. And of course we know about the weight of expectations heading towards this. Now, inflation data from the Eurozone earlier this week really sort of gave them the pass they needed to increase easing. Weaker inflation, much weaker inflation. Of course, that drop in commodity prices feeding through, but also overall inflation declining. So it will be much easier, I think, for the ECB than it was back in December to actually boost the easing programme. Remember that disappointment we had when Draghi didn't live up to those expectations. Then we had a big rally in the euro that really took off in December, paused a bit beginning of January, and then took off again in the second half of Jan. Has come off since then, but it looks to be turning around higher again. You see the RSI climbing back towards that 50 midpoint. You've got 2 solid days of gains in the euro today. Of course, if he does boost easing, and he does do it significantly, that would push the currency down. So you could see euro dollar unwind some of those gains from Thursday, but it's not surprising to see this run up into Thursday. And so if you're long euro dollar, if you're long the euro currency pairs, you might see this sort of continue for 2-3 days next week. But be aware, Draghi could easily cause that to change direction.
It'll be interesting to see as well how this plays out in the equity markets.
And the corollary of that, of course, is if you get the euro going down, then the likes of the DAX, the CAC, the stock 600, the stock 50 will start to go up. So do keep an eye on that. That comes, of course, with a massive caveat at the moment, because indices have had this fantastic rally off the lows of February. If you've been riding this trend all the way up, and some people have, then you've done very, very well out of it. Of course, it's a bit of a bear market rally at the moment, certainly a counter trend. So you can see on that DAX chart the broader long-term downtrend where we sort of pulled back off the lows, but it fundamentally hasn't changed the broader picture that we did see a lower low, crucially, in February from the lows of September and October. So the question is now, can we continue to clamber higher back towards that 200-day moving average, 10,340? Even for the DAX, that's still 600 points away. So Draghi would have to deliver in fine form to really get us moving back in that direction. Even if we got there, we're still in the downtrend. So there needs to be something that changes the picture at the moment. If we to look at, for example, to move away from the data to go to commodity markets, if you like, if we look at the likes of, well, copper, zinc, all the raw materials have started to rally quite significantly. Is this a short squeeze before we go lower again, or is it the beginning of something more sustained? If it is something more sustained, that will be the other element that provides equity markets with the fuel they need to keep going, because we've had a strong return in risk appetite. But at the moment, people think, well, it's still in the short squeeze end of the spectrum rather than the sort of fundamental rally because things are getting better.
Yeah, OK, all right. Let's take a look at some of the corporate news headlines due to be released on the week starting March the 7th. Nothing of any substance on Monday, so we can go straight to Tuesday to take a look at some of the companies we're watching for. And we get WorldPay. This is a almost £4 billion company. Eshaw Group, St Ives, Foxtons Group, the estate agency chain, John Lang, Merck and Paddy Power on Tuesday. Snapshot of where we are on the Wednesday releases. We've got the Prudential, one of the largest stocks worth watching out for there. Also Deutsche Post, Lagardère, also in amongst the mix on Wednesday. Let's take a look at Thursday's numbers. Aviva, staying in the insurance sector. Home Retail, this is a company now that really only has Argos as part of its stable of businesses. It does have a few smaller businesses, but the lion's share of that is now Argos. Morrison, the supermarket chain. Aldermore, one of the challenger banks coming through. We saw some good figures out this last week from Virgin Money, which saw 50-odd% plus in pre-tax profit. Is that going to be repeated at Aldermore? Michael Page, recruitment indicator for the city as much as anything else, and Dollar General, the equivalent of the 99p store in the States. Let's look at what's happening on Friday. Old Mutual, Computer Centre, Wetherspoons, and Deutsche Bank in amongst the mix. That is an annual report from Deutsche Bank. That is not earnings. That's an annual report. We saw those earnings a couple of weeks ago, but Deutsche Bank out with an annual report to investors next week. What do you make of that mix there? What are you following?
It's nothing particularly stellar, if you like, for the week. So again, it's all about what the ECB does. But if you're looking at sort of earnings next week, the big one is Prudential. There's full year earnings coming through from the insurance giant. Now, again, we've come off the lows quite significantly there. And you can see on that chart, we're back above £13 a share. So we're back above those August, September lows. So in one sense, Prudential has done very, very well. But it is starting to look a bit expensive, around 2.5 times book value. But if you've been in insurers over the past few years, you've been there because of the dividend yield. And that 3.5%, that's still very, very strong for the Pru. So it looks as if we'll continue to get a decent income from that stock. But it's all about the Asia story with Prudential, and that's not as strong as it was, and that's the big problem. I think that the insurer doing okay in parts of Eastern Europe, but in Asia we're still concerned that we'll see a hard landing in China. That will affect other economies, and that will have a bearing, of course, on the business over the longer term.
Yeah, one of the stocks I've been following, this is a bit of a personal thing, because I use Homebase a lot, I have to say. So I've followed what's been happening with Home Retail recently. It's got rid of Homebase, of course. The company now really, as I say, only consists of Argos.
Yes, I had no idea you were the last of the great DIYers, Joe. But Home Retail finds itself in the midst of this battle between Sainsbury's and the South African group Steinhoff, which have both expressed an interest in buying the firm. So the share price clearly has been racing away since that news came through in January. That's sort of the first original thought, I think, in the supermarket sector for quite some time. Nonetheless, the question is really, are they going to focus on Home Retail as an independent business, or are they going to sort of set their stall out and say we still deserve to exist outside of Sainsbury's or Steinhoff, or are they going to start to move towards one or other of the bids? Definitely, I think they're slightly moving towards the South African bid because it does value the company slightly more than Sainsbury's does. But you can see the logic behind Sainsbury's already with that relationship with Argos, taking over the company and bringing them back together.
OK, all right, Chris, thanks so much indeed. Some of the stocks to watch out for on the week starting March the 7th.